ask you your thoughts on all of this antitrust news. Why now? What do you see as some of these big competitors now coming out against it?
Yeah, it's an arms race right now in terms of the chip world. And I think we're seeing a consolidation between software chips, and we even see companies like Apple with the M1. And I think this is really a shot across the bow. I mean, these companies don't want to see the deal go through. I think the street still thinks it likely does. But I think it just speaks to a convergence that we're seeing in what's really is the chips arms race on the horizon.
Dan, what is the increased likelihood that this deal doesn't go through?
I think right now the street still believes it goes through. I do think you're seeing this from a regulatory perspective, especially in the sensitive time in chips, because as we see the decoupling going on, which speaks of the chip shortage and coming off some of the U.S.-China cold tech war, I think it just speaks more and more important to how that could crimp the whole supply chain. And when you have one vendor with more and more control, there's a double-edged sword to that. And I think many view it as more downside than upside. And that's what really needs to play out in the market, especially in what I would call a little bit of a white knuckle period, especially on the heels of the chip shortage. That's an overhang on tech stocks.
I want to get to that chip shortage, Dan. First, though, you know more about multinational and cross-border deals. I was reading through Ian King's story, and he nails it. I mean, it's the FTC, it's the European Commission, it's the UK Competition and Markets Authority, it's China's State Administration for Market Regulation. How many regulators are we having to go through, and how much more does that complicate the story?
Yeah, it's a Rubik's Cube of regulators, and it does definitely complicate it, especially at a time with heightened focus from a regulatory perspective in this industry. And I think we're going to continue to see a bit of an Everest-like uphill battle as we go through more and more of the regulators, and that's why you saw the piling on today with those big tech giants, especially with Redmond and others speaking. And I think that definitely is going to put more of a spotlight on this deal.
Why isn't the market pricing in that the deal might not happen?
Because right now, we've seen more and more barks and worse than the bite in these situations. And I think the market's learned over the last year or two that even though there could be noise, a lot of these deals ultimately will get through, even if there are potentially some concessions. So I think that's the view of the market right here. This would obviously be a massive deal. There's going to be a lot of noise. There could be some changes, but the market's still pricing the deal gets done.
And we should be fair, Dan. I do want to read Nvidia's statement on the FTC probe. And they say that we are confident that both regulators and customers will see the benefits of our plan to continue ARM's open licensing model and ensure that a transparent, collaborative relationship with ARM's licensees, and of course saying that that will continue. So of course we will bring you more comments from that company as we get them. Dan, as we transition from the arms race, as you mentioned, to this broader story of a massive shortage of chip supply, hasn't this just highlighted the issue that is?
No doubt, and this is coming off. We're going through a U.S.-China cold tech war, and that's why right now there's more and more focus on Biden administration. You've seen the halting of TikTok, and there's a view that there's going to be more and more of an olive branch toward Beijing because we're seeing some of the damage here, and it's the one thing that could crimp this global demand rebound on autos, on EVs, and really across the tech food chain if it does not get resolved, especially as it all comes down to Asia and in terms of what we're seeing from the shortages, and that's something that's being called out more and more across the supply chain, which is a bit nerve-wracking for investors as we continue to see a green light for tech, and we're coming off of a strong earnings. But this is something that could definitely ruin the party.
But is it a supply chain issue, or is this just massive, unprecedented demand, given the massive, unprecedented recession we just came off of?
Yeah, 75% of it is demand-driven. Demand has outstripped supply to a point that I think no one even anticipated that was within the goalpost. And that's something that becomes a high-class problem as we've seen demand spike, especially on autos, on EVs, and across the whole PC supply chain. But it also is supply shortages coming off of some of the bans that we've seen in China. And it does show the double-edged sword to doing that And that's why there's more and more focus on 1600 Pennsylvania Avenue if we see a ratcheting down of the U.S.-China coal tech war, which we believe happens. And ultimately, I think that's just another bullish sign for tech stocks moving ahead.
Can 1600 Pennsylvania Avenue do anything in the short term?
In the short term, it's really theater, and it's more what I would say posturing at this point. They really can't do anything, and the supply chain is cemented in Asia. There could be some good words and some strategies, but really nothing's going to change the current situation. It all comes down to supply starting to get normalized, as well as the U.S.-China relationship.